We have never even offered a cup of tea to any individual in the insurance company to settle that. We have just understood how death has happened. They have got the right papers, presented to the insurance company, and the insurance company has happily settled that claim without any efforts. Invest in such products that which helps you over a period of time.
So can you maybe give us an example, like similar to LIC policies in India, are there any top products that are available and a lot of NRIs are currently investing in? Or
So what happens?
welcome to Level Up with Priyanka Shah. As an insurance advisor in Australia, I work with a lot of Indians settled here in helping them navigate their insurance needs. One of the most common questions that I get asked often is, do we get anything in return if I don't use my insurance? That is, if I don't die in 20 years or 30 years, will I get anything back if I don't want to continue my insurance? The short answer is no. But the reason this question comes up is because of our exposure to LIC products in India growing up. Although these sort of products are no longer available in Australia, especially since the introduction of compulsory superannuation guarantee in the early 1990s. But the good news is that we do have the option of exploring these options available in India. To explore this topic further, I have the pleasure of speaking with Tejas Shah, a highly experienced and trusted insurance advisor in India. He has a wealth of experience dealing with NRIs and understanding the unique needs of NRIs settled all the way from Australia, America, Europe, and beyond. Tejas is here to share his expertise with us and helping us explore the options of protecting our families, our assets, leaving a legacy, and understanding the investment-based insurance options as well. So please join me in welcoming Tejas on the show. Tejas, thank you so much for joining us today. So excited to have you on the show and to talk about all things investment and insurance, which is very unique to the products what we get in Australia.
Yes, thank you, Priyanka, for
No, it's my pleasure. Tejas, I think as you're aware that I am a life insurance advisor in Australia. And the products that we get in Australia differ slightly to what we get in India. I deal with a lot of Indian clients there. And as Indians, the concept of LIC is so deeply ingrained because people are used to knowing that insurance is going to offer them some sort of an investment at the end of the period. That if they don't use it, there's something that they get for themselves, their family, and everything. But that concept is no longer there in Australia. And people always question, and is there something that we can invest in? Why don't we get it in Australia? And things like that. So can you explain us a bit more about this dual purpose plans which combine insurance and investments that we get in India?
Of course, Priyanka. So, the products that we have in India are absolutely fascinating and they are very tailor-made. Some of the products, if I were to say, we have something called money-back products, we have endowment products, we have whole life products. We also have products where we have combination of whole life with money back and whole life with endowment. These products are absolutely fascinating and they can be for a minimum period of 15 years and can go up to whole life, which is 100 years. Then we also have something what is unit-linked insurance products, products which are linked to equities and net market, where the client can decide how much equity he wants, how much debt he wants. There are various funds in every product which we can select.
Sure.
And the whole life policies or the endowment policies that we have also offer a compounding annualized growth rate of about 5% to 7.5% annually compounding. And this can be even exempted from taxes. So no tax amount.
Right. Okay. So when you say whole life and endowment, so that's basically an insurance product, but it is going to go on for a certain period of time. That's what determines whether it's a whole life or endowment. Is that right? Because I just want to explain it correctly to
Certainly. So what happens is an endowment product is a predefined product where the insurance company says that, okay, this is a 20-year target. You will pay for 20 years and at the end of 20 years, if all goes well, I will give you the money you have paid to us back with interest.
Right.
That's an endowment product. Sure. A whole life product is a product where I can cover you for your age of 100 years. And if at any given time, if you need cash value,
Sure.
you can just press a button and take the cash value.
The cash value is what I have already paid to the policy of that.
No, the cash value is far more higher than what you have already.
Right, okay.
So in such whole life policies, the compounding annualized return can be in the range of 5% to 7.5%.
Right. So it's always going to give us more than what people.
Certainly, much more than what you have.
Well, very interesting, and it's very unique because for us in Australia, what we put towards is it's a purely insurance product. It is going to give us protection if something goes wrong, if you pass away or get disabled or an illness or something, but there's no return that comes out of it, which is where this requirement for people to understand what options are there beyond what's available in Australia comes in. Uh, are all of these products available for NRIs living in Australia or anywhere in the world to invest in, or are they only available to Indians?
No, these products are available to people living across the world who are Indians or Indian passport holders, OCIs, NRIs, everybody.
Okay. Yeah.
Generally available in developed nations. Sure. For it may not be available to countries where there is a higher amount of risk.
Absolutely, absolutely. So I think majority of the people in Australia would either be OCI holders or PR holders, which would they would anyways have their Indian passport.
So okay, we are servicing clients today from New Zealand, Australia, US, Canada, London, everywhere.
Okay.
So we already have these clients.
Okay, Ted. So this is a very exciting conversation. So what I did was before you came on the show, I have spoken to a few of my clients and asked them because this is a very common question that people have about investing in such sort of products. So I have a range of questions that I've got from everyone. So I want to go through everything so that we don't miss out on anything while we have you on the show.
Please.
So thank you for that. So can you maybe give us an example, like similar to LIC policies in India, are there any top products that are available and a lot of NRIs are currently investing in, or can you just shed some light as to what would be some of your recommended products? I don't know if you can recommend, but just something that, or a brief design of what sort of products could be available to the NRIs.
So what happens? I'll share 2-3 examples with you. I'll share a very basic example. So let me assume that there is a 10 lakh rupee policy where the client is by the 10 lakh rupee policy. The premium for that policy could be around 50,000 rupees payable annually, which is payable for 15 years. So in 15 years, the client will pay about anywhere between 8 to 8.5 lakhs rupee in a 10 lakh rupee policy. And the policy matures at the end of 21 years. And on maturity, the client is expected to receive anything more than 20 lakh rupees.
Okay.
Plus, he has enjoyed protection for all these 20 years.
Is the protection 10 lakhs when you say it's a.
So the base protection starts with 10 lakhs on day one. But there are bonuses which will keep on added, which will be added every year to your policy and which will keep on increasing year on year. So like we have the per annum bonus win is 45 rupees per thousand, which means on a 10 lakh rupee policy, day one only you have a bonus of 45,000. If the death happens in the first year, you are liable to pay 10 lakh 45,000 to the family. If the second year bonus is again 45,000 and the death happens in second year, my risk coverage is not 10 lakhs but it is 10 lakhs 90,000. And so on, it keeps on increasing year on year.
Risk is the coverage increases and we are entitled to a 20 lakh return at the end of the
31st.
Yes. Okay, that's pretty good. And I think the risk of the person even investing in it is not that high because they're putting in the money, they're always going to receive a much higher return than what they've put into it.
Certainly.
And are these LIC plans or there are many other plans? Because LIC is something that everyone knows about, but is it, or are we always stuck to LIC or are there many other options available?
There are multiple options in the industry.
Okay.
There are multiple options in the industry. More or less, the products will be on similar lines. Now it all depends on what the client wants. There may be a client who might come up and say, you know what, I don't want to pay for 15 years. I only want to pay for 10 years. I only want to pay for 6 years. I only want to pay for 8 years. There may be someone who may come up and say, no, 15 is too short. I am young. I can pay it for 20 years, so 5 years. It will be something better. Well, these are more or less tailor-made designs. We design this product
Based on the requirement.
based on the requirements of the client.
And also what the client is capable of paying as an annual fee.
The client's comfort is the
Sure. And What are the tax, when you just said that the returns are tax free, is that for everyone? So say for example, when you say that the 20 lakh that I received in the 21st year, that is that completely tax free?
Completely tax.
Okay.
There are certain conditions to it which we decide, which we discuss as we go further. But there are certain conditions. There's a section called as Section 1010B of the Income Tax Act. This falls under Section 1010B of the Income Tax Act, where there are three conditions. If you are able to take care of these three conditions, the complete proceeds are exempted from taxes. So, but more or less, whatever grants that we do, whatever designs that we draw, it's all exempted from taxes.
Okay, right. That's great. And as NRIs, we need to be a tax-paying citizen of India, or
Not really. Not really.
Okay.
Your income, whatever income you are earning in your country, you can share the documents of those of that particular country, and we will accept it.
okay, so we don't really have to pay taxes here to be able to get it.
Oh, no, absolutely.
Okay, great. Perfect. And are there any specific products that are designed mainly for MRIs, or are the products same for idiots and NRIs that we just pick and choose what suits them?
The products are same.
Okay, so there's no anything specific for the NRM. Okay. But the fact that it caters and it's available to NRIs at the same rate of what it's available to Indians, that gives a huge
Absolutely, the basket becomes much bigger.
absolutely. So, and from all the whole life endowment and everything that we mentioned, the ULIP plans as well. The ULIPs are the ones that offer more returns on the investment, or is that not correct of my understanding?
So this is like comparing an apple to an orange, right?
Right.
The endowment products that we talk about, or the whole life products that we talk about, or any investment done in LIC, in debt products,
Sure.
is guaranteed by the central government to be paid on maturity, which means that every penny that you have paid to LIC is premiums, and every penny that is accrued as bonus in that account. Now, if LIC of India goes bankrupt, then the central government guarantees to pay you that money back. This does not happen in unit-linked insurance policies. And when you go to ULIPs, the complete investment risk is borne by the client. Hence, because you are taking that risk, and if you are putting your investment in equity, if the equity market works well, your returns can be crazy.
Sure. What are some returns that you've seen? Like, or give us an example of what sort of returns can.
Priyanka, for the last 3 years, Indian equity markets have seen a return of about 30% compounding per annum.
Wow.
People's money have doubled in the last 3 years.
That's unheard of. Like, especially coming from Australia, because if we gave a 6% or a 7% return, they'll be like laughing about at me.
So, if we have clients who are investing in such products,
Yeah.
we are very, very clear in advising our clients that we invest for a minimum of 10 years. And we can expect a minimum compounding return of 15% on these investments.
Okay. Sure.
This is our assumption. There is no promise, there is no guarantee. But the way we are seeing the Indian equity markets, the way we are seeing development and growth in India, I think we should expect a minimum of 15% over a period of 10 years. But if I'm planning for someone beyond 10 years, then I will not suggest the equity.
Sure. Absolutely. And I guess even the age and their own risk appetite is
Absolutely. Sure.
so no, absolute. But I think the returns is what attracts people living overseas, because always the grass is always greener on the other side. They're like, we're not getting the returns that India gets, but I guess these are the options that we can use to invest in, which gives us a higher return without so much of a risk. Which was the risk is not that high compared to the returns that we would get.
Even in the endowment policy or a whole life policy, the return of 7% compounding annually, tax-free, is still a very fancy return.
Yeah, exactly. Yeah. And it's kind of a guaranteed return.
Or borrowers.
So, and as I said, like 7% is what we get on growth portfolios in Australia, right? And
That's more or less the million trucks. Zero risk. Almost zero risk. You would be surprised. If this is also a question. We recently paid a maturity amount to one of our clients for a 3 lakh policy, which was about 30-year-old, and the maturity amount is 10 lakh 3,000 in 30 years. The client has paid 10,000 rupees per annum for the last 30 years as premium. And today's maturity amount is almost 10 lakh, something more than 10 lakh. The compounding annual growth on these investments is about 8% in the past. And this is completely exempted from taxes.
Wow, that's great. And I think our parents have already done the bit for us. Like, for all of us who go in there, who college, we are first generation Indians. All our parents are living here, and they luckily have got these wonderful products for us, which we are going to reap the benefits of going forward. But now I guess it's our turn to do it for our children, and these are the plans that's going to help them in the long run and give them the returns that we probably need. So I think insurance is great in Australia. I think they're going to secure all the assets, they're going to secure their families to get it. But to combine this sort of investment products is wonderful.
Absolutely.
Because one of the questions people will also have is that if they get these amazing things in India and Indian policies, why would they need insurance in Australia? My understanding and my answer to that question is that it's always great to have insurance in the place you live. One, because you want to have access to that as soon as possible. And while it covers you for death, the disability covers, the illness covers, the salary insurances would only be available to them in the country they live.
Absolutely.
And what we would be able to offer through the Indian parts is just the death insurance, which will be a small part of what their liabilities in Australia would be. Would that be right of my understanding? I think cannot completely rely on one or the other, but it's about being smart and getting it in different baskets and maximizing their returns from different.
Absolutely. It's all about asset allocation. Like you have asset allocation in your investments, similarly, you should also have asset allocation on your insurance. For anybody, as you rightly said about mortgages and liabilities, if there's a company called ABC with whom you have a mortgage, and if there's a company called XYZ whom you have insurance, the moment ABC sees that you have insurance with XYZ, he is a relief. He knows that it is liabilities to with it. Okay. So it's much easier.
Yeah, 100%. So I think, I think for people living in Australia and who want to concentrate, it's also going to be for them to be smart about how they get their insurance allocation done correctly, what they get from Australia, what they get from India, and overall combine and have a plan that works in giving them the protection and returns as well in the long run.
Absolutely.
Yeah, that's great. I think you've already covered on the tax benefits because most of it is tax-free, so we don't need to elaborate on that further. But I wanted to talk about a real-life scenario, Tejas. Like, a lot of people that I deal with are people like white-collar professional workers, maybe in the fields of IT or marketing and everything, late 30s, early 40s, having young children, one or two, having a mortgage. So this is a very typical profile of an Indian in Australia. And they have accomplished probably say 800,000 or 900,000, close to a million. That's probably going to be like 4 crores in INR that they have to pay for young children under the age of 10, let's assume. And they would potentially have some level of cover that covers their mortgage in Australia. So that's taken care of. But their investments are not much. Like they don't have much that's going to give them returns for their children. They don't have much other returns apart from the superannuation, which will give them return when they turn 65, because we've got compulsory superannuation. So at 65, they get 10% of the salary which has been putting all the years while they've gone through. So tell us, what could that family do to maximize the returns on a little bit of investment that they could do, and how they can plan for the children as well?
So we discussed something about the whole life plan a few minutes back. I have a whole life plan which is more of a variable insurance plan. This whole life plan is a combination of money back, endowment, and whole output. I'll explain this product with numbers.
Yes.
So we assume that we pay an annual amount of 3.5 lakh rupees in this case. Sure. Pay this amount for 20 years. I take this insurance on my child's. Let me assume that my child is 11 years old or 10 years.
Yeah.
And I take this insurance for my child. And we pay premium for 20 years.
Sure. So that's 3.5 lakhs for 20 years.
For 20.
So 3.5 lakhs is, say, at a rate of 50 to $7,000 annually is what we have understood.
Sure. So we pay this money for about 20 years. This gives me a life coverage of about 70 lakh rupees. So 60 gives me a coverage of about 60 to 70. I'll come back to here.
So maybe 120,000 or
Yeah, somewhere around 100,000 euros. And why this money is paid after 20 years from now, from the 21st year onwards, the family starts receiving about 4 lakh 80,000 rupees from the insurance company.
Okay.
Till the child is.
Right. Okay.
Till the child is. Every year, this money will go to the family. So this is about 8% of the capital sum insured.
Sure. Sure.
This money goes every year to the family.
So the family is essentially receiving $9,000 every year till that child is going to live. So
Yes.
that is a good amount of money that's potentially their holiday costs taken care of every year. Like I put with
All this money, every penny that comes to you is exempted from taxes. There is no tax on this.
What about the taxation in Australia? Or we have to check that?
You will have to check that. India government will not charge you any tax on this money that is coming in.
Sure.
Now, this money comes from the 21st. If you have taken an example of my child being 10 or 11, then you can assume my age being 25.
Yeah.
So from my age of 55, the child starts getting his money. I am trying to secure myself and the child both in this bucket. Okay, so what I do is I get this money investment on my child's name, but I continue to be the owner of the bucks.
Yeah.
So the 21st year when this money comes, it does not go to my child. It comes to me
Right. That $9,000 is coming to me in my account.
in my account. Okay? Till I'm alive, I will continue to get this.
Okay.
The day I am not there, I will nominate my child. And my child will continue to receive this money till he is alive.
Wow.
Or till his age of 100 years. So I am planning something for myself. At the same time, also planning for my son. About it.
Yeah. So because that 9,000 that I'm receiving, I can actually give that 9,000 every year to my child as a gift.
Absolutely.
That this is your gift, and every year he gets that amount of money from.
Absolutely.
Or I can use it for me while I'm alive if something comes up and I need the money.
Absolutely. To add here, let me assume that we are 55. I've started receiving this 9,000 every year. I'm pretty happy with this. And at the age of 70, there's a medical emergency or a contingency benefit or something like a COVID has again come up. And this $9,000 are not going to help me. I need a bigger child. So there's a probability that I have 2 or 2.5 crores lying in my account when I turn 70. I can just touch and take the 2.5 crores in my account. Lump sum and close the account. So getting 4,80,000, 5 lakh rupees per annum
Yeah.
is the essence of money.
Yes. Yeah.
It is taking the money whenever I want to withdraw. Closing it without any exit load is the essence of endowment.
Sure.
And having a risk coverage till the child is of 100 years is the essence of four life.
Absolutely. That's beautiful.
In the past, what has happened is our parents has taken an insurance and they decided, okay, when Tejas grows 35, you should get something. When Priyanka reaches 45, she should get something.
Yeah.
What if I don't need that money then? What if I need 5 years early? Or what if I need that money 5 years today? I don't need it today. I'm going to reinvest it for 5 years.
Yep.
But if the contract ends, the insurance company will not continue.
That,
Here, that does not happen. You are rich, you are open. If you want to take it, you take it. Whenever you want it.
so the source flexibility, depending on what my life circumstances are, I get decide and I have the power to decide what I need to do with it.
Absolutely. You decide where you want to exit.
Right. And that's wonderful. And I think this is such a great plan and such a great way of legacy planning for ourselves and our children both. As the Tejas, I have to thank you for helping me plan something similar with my family and my children as well. Because I think as we spoke, my children and my twin boys are 8 years old, and we've put something very similar for them, that they're going to start receiving something when they turn 30, and then beyond that.
It's the same one that we have for your
Exactly, and I'm grateful to you for introducing me to this, and which is why I'm very excited to introduce this sort of options to my clients and beyond as well, because this options and this knowledge firstly is not available. So I was sure it's going to be much valuable to everyone who listens to this and sees this.
Sure.
But the other question that I had, Tejas, is a very big one. Is people have, I don't know if it's bad experience or is it just hearsay, is that they are traumatized about how the claims work in India, because the general conception and the misconception there is that Indian companies don't pay, the claims never work, and they will find every loophole in the world to not pay the claim. Is that true now? Maybe, I don't know, it could be when our parents were in their times, but what is the current status around that?
So Priyanka, I have been working in this industry since the last 25 years. As you know, I'm the second generation in this business.
Absolutely.
My father also did the same.
Yes.
So my collective experience is of 50 years in this industry. In the last 50 years, we may have settled more than 500 death claims for our clients, their relatives, and people we don't even know of. We have never even offered a cup of tea to any individual in the insurance company to settle a claim. We have just understood how death has happened. They have got the right papers presented to the insurance company, and the insurance company has happily settled that claim without any ifs and buts.
Okay.
If the documents are not right, if there is, if you have not shared proper information at the time of taking insurance,
Yeah.
then probably the insurance company can ask you 5 questions.
Sure.
If you have done nothing wrong, then the insurance company has to pay you by all means. The claim settlement in India by LIC of India is superb. For the last 50 years, I have never faced a single rejection.
Wow.
Anyway,
That's great to know, because that was my next question. As have you ever faced a rejection?
we have never faced rejection.
That's
There could be queries. There could be queries by the insurance company,
Which is-
okay, you help me with this, you help me with this. But if we are true, we got all the documents.
Yeah.
The claims are honored by.
and it's pretty quick, or is it a tedious, time-consuming process? Or
We settled it claim about 9 months back, which was for 1 crore 50 lakh rupees. The first 60 lakh rupees was paid in a matter of 7 days, 8 days, and another 90 lakhs took about another 15, 16 days to. So I got about within 25 days, both the claims was
which is very standard to how it works in Australia, because the standard turnaround for a death claim is around 3.5 weeks, which is very similar as well. And the rates there is around 93% claims acceptance rate. Is 7% could be like non-disclosures and other things, but yeah. So I think, but it's great to know that from your experience, you've never had that issue at all.
Never, never. The kind of history that we get from clients at the time of proposal is very, very lengthy. We try to understand each and everything. Even if my client has classes, I mention what is the classes numbers that he has. So the insurance company does not have any chance to refuse my claim.
Okay, great. Now tell me about the logistics of getting a policy in India. Say, for example, we are living there. Do we apply from there, or do we have to physically come here in India when we are applying for a policy, or any of these plans that you spoke about, the whole life endowment or the ULIPs? Like, are there different procedures for them? Is there a physical requirement necessary? Or
No, physical requirement is not necessary, but can even plan from the country where they reside. While it would be devised to be here so that the paperwork gets very fast, the medicals can happen very smoothly.
Sure.
But if somebody does not want to come on and do everything from Australia, we can
the origin is still there. I hope so. Is true. Okay. And say if someone's coming here, like December, Jan is the typical, and when people from Australia visit India, because that's the summer holidays there is which. And say they contact you as an example that they want to put something in place. How long do you think it would take for them to contact you, from the time they contact you to the time it would come to this?
So before they are coming, if somebody knows that they're coming to India on the 5th of a particular month,
Yeah.
and we start talking and understanding the products in advance, we close in on what we want to buy.
Yeah.
The moment they are in India, the whole process will take about 6 to 7 days for us to finish our work.
Okay.
On the higher side.
Sure. And all they need to be available for physically is the medical test.
Only for the medical and the document signatures.
Okay, so you need physical signature.
Ridiculous immediate signatures. So
Okay, and they could be all over the country. So do they need to be, so you based in Mumbai, do they need to be in Mumbai to meet you, or they could be in any part of the country?
they can be any above.
Okay, and then you can get everything organized from
Yes,
there.
we can.
Okay, great. And What about the money side of things? Like when we say they receive claims, they receive these returns and everything, I believe it's in the Indian bank accounts, right? They need an account here. Okay. And so do you set it up when the policy is set up, or they'll need to do it separately?
No, they'll need to do it separately.
But the details will have to be provided when the application is less. Okay. So that will be part of the process, that they'll need that bank account, they'll need everything. So, and the payments will also go from that account, I believe.
Precisely.
Okay. So that is something that the NRI, NRO account will need to be set up, and then everything, the proceeds will go in and out from those accounts.
Absolutely. Also, to add one more thing here, India also has a practice of GST.
Yeah.
They also charge GST or insurance premiums. So the first year GST is 4.5% of the premium, and second year onwards the GST is 2.25% of the premium till the last premium period. For otherwise, this GST is not happening.
Oh, right. Okay. So that's even better. It's cheaper.
Yes,
So it'll
it's
be cheaper to LP and NRI and SA policy versus an Indian. No, that's great. That's good to know. Finally, what advice would you give to NRIs who are on the fence about investing in these Indian insurance policies? Like, do you have any advice that you'd like to give them, or just your 2 cents?
But the products that we discussed about the whole life policy, which has multiple options, an endowment, a money back, and can exit your money whenever you want.
Yeah.
These are the finest things that we can think of.
Sure.
Something like this. So I did not those clients. Let me give you a small example here. There was a client who we had serviced and who we had sold our insurance somewhere in 1993, 94. And about 2 months back, we were supposed to set his maturity date. I never met this client because I thought that he wasn't doing financially work. I tried to see him, but I could not see him because he wasn't available. When this maturity was about to happen, we needed some signatures.
Yeah.
So I requested him. I called him and requested him if I could see.
Yeah.
He was happy to see me. So I walked into his residence. I was surprised to see. He had a 2 lakh rupee policy. It was like small bars. It was a 2 lakh rupee policy bought somewhere in 1993, and we were settling this maturity claim. The family was very disturbed. I was paying about 7 lakh rupees as maturity values, not 7.5 lakhs. I'm not sure about, but 7.5 lakhs was the maturity amount that I was paying to him. And while reading the amount, I could see tears in his eyes. He was signing those documents. The above was mentioned, and I could see tears in his eyes. And he signed those documents that he gave me. And he said, "Son, I want to share." I said, "Yes, please do." He said, "You know what? How much this money matters?" I said, "No, I don't know." He said, "My family's annual income is just 3 lakh rupees. I have a wife to take care of. I have a son who's not making enough money. I have a daughter-in-law. I have grandchildren. Our annual income is 3 lakh rupees, and today you are giving me 7 lakh rupees. This money will help my family for the next 2.5."
You almost walked in like God to them, I think, like at that point in time.
It was not me who wanted as a god, but it was his own wise decision to invest in such products that which helps him over a period of time. So today is a time when Priyanka, he needs this money the most and is available to him.
Absolutely.
Anything which was required to him, maybe mutual funds, maybe stocks, maybe physical gold, or any fixed investment which was available to him, would all liquidity.
Used by them.
Only this one asset which he could not liquidate stood by him, and whoever needs this investment the most, this is coming back.
And yeah, do share from my personal experience why Tarun have invested with your father. Is
Yes.
said so many policies over the years, and they've done so much in their heydays, and I have seen how much help it has helped in this age. Like at this age, sometimes they need money for different things, and maybe my dad is retired by now, and so much help has come out of the policy that were invested in those times that it is just amazing to see that, a little bit of planning takes you such a long way.
Absolutely. So to add here, we also have something like annuity policies.
Okay.
Where a client gives in a lump sum money today, the interest rate is fixed. He can choose to defer the pension by 5 years or 6 years or 7 years, 8 years, 2 years, whatever is his choice. And on that particular day, maybe after 8 years, let me give an example of 8 years. After 8 years, on a fixed date, he starts receiving X value, which will go on for his life. But the interest rate can come down to 2% in India, but the rates promised to every credit where he lives.
Right.
And he also has an option. If he does not want this money, if he is no more
Yeah.
at one point of time, then his spouse continues to receive this money of pension. And when both of them are not there, the capital that he has invested can go back to his nominee.
Wow. So it's basically not going anywhere. The money is there and it's going to come back to him in multiples at the right time.
And every penny that you have invested is guaranteed by central government of India.
Right. That's a. Are there any such plans available for us Indians living overseas for aging parents? Like we have parents who are here and are aging, and maybe if we want to plan something for them, is there anything available as such that
Certainly, this product itself,
so we can start now, even though the parents are beyond 60 or something?
at any age,
Okay.
even if they are at an age of 70 years, you can start something like this.
And that means, can you explain a bit, like if I'm investing $5,000 or that's 2.5 lakhs into such a plan, would that give returns to my parents? And
So let me share this by example of 10 lakh rupees invest. So let me assume that if you are investing about say 10 lakh rupees in this policy,
every year.
only once.
Only once.
It is a one-time investment. You have given me 10 lakh rupees today, and for the next month, parents starts receiving approximately 5,000 or 5,200. I can change the exact number and come back. Sure. But they start getting 5,000, 5,200, 300 rupees every month, starting the next month, as early as next month,
Okay.
till the health.
Right.
Till then, if something goes wrong with one member, the surviving member will receive that amount. And the day both of them are not there, this capital can go back to the own,
Okay.
to the line.
I decide that I want to insure my parents for 50,000 rupees every month, and then we can calculate it and come up with an amount that I need to invest today, and that will ensure that they will get their 50,000 every month till they live.
Absolutely.
Okay. And say if it's say 20 lakhs that I need to invest today, that money is not going anywhere because I will eventually get it back even when both the parents are not there. I will be the nominee on the policy. Whatever's remaining there, it will come back to me.
Absolutely.
Okay. Now that's wonderful. Wow, this is great to know because as children there and with aging parents, we always worried about how they're doing things and if they have enough financial means to continue to their lives. Something like this would be a great thing. Like we don't have to worry about giving them money, and maybe as business owners, 1 month may be good, 1 month may be bad. Here we've done something and we've guaranteed them this money every month.
Absolutely. Absolutely. So I'll share one such example with you on this. We had a client who has done this for his parents who lives in US, and his problem was that he wanted to send some money every month to his parents. He fixed that out. Then I send X value every month to my parents. But there is someone after me from a difficult area, I have to make some arrangements. I go to the bank and do something.
Yeah.
Multiple issues keep happening. And there were some charges also which I applied when you do bank transfers.
Yeah.
So whenever I said, why don't you invest something in this plan? They said this was somewhere in 2017-18. And the interest rates were slightly better at that point of time. I think we were about 7.2% was the annual interest rate on 30 years. He did this. And you'd be happy to know, Priyanka, when COVID started, everything was shut. We all had a crazy lockdown.
Absolutely.
But in spite of that, I think India faced the lockdown from the 28th or 27th of March. But on the 1st of April, the date changed in the calendar and the money was transferred in parents' bank account. On the 1st of May, the date changed in the calendar and the money was transferred to the parents' account.
Right.
This is very, very difficult if
Absolutely.
your health is not doing great, or if you could not reach the bank on time, and the parents may keep expecting that he would not be able to honor.
And again, it would happen such a bad situation to be in where you've promised that you couldn't do it, and not just the circumstance. Like as I said, that business changes, a lot of other circumstances can change, and then you don't want to fall back on the commitments that you've made. Like these are little commitments that you have to meet. Like, there are no other options. Like, the parents depend on us, and if we cannot deliver it, like, they have no other option left.
Absolutely.
So these sort of plans guarantee that for us and give us that peace of mind that no, my parents will be looked after regardless of anything that happens to me as well.
Sure. Absolutely.
So, nah, that's wonderful. Thank you for sharing all these. Like, I think I'm very excited about doing all these investments with you while I'm here, and I'm sure a lot of our listeners would be excited too. I'll put your LinkedIn details and everything in the description. So please follow and contact Tejas anytime if you need.
Thank you.
But yes, thanks Tejas. And I think let me just check if I've missed out anything before we wrap up. Then I actually just had a personal question. With your NRI clients, Tejas, are there any specific, like any other plans apart from what we spoke about that you think could be appealing, or we've pretty much covered everything?
I think we're pretty much covered about. Still, as you said, our work, your work, my work is all depending on the client's need. So the moment we hear something from the client,
Yeah.
something starts coming up in our
Design something.
and we design something.
Yeah.
So this is something that we'll be speaking on individual products. Now we have clients, but even we have even created a combination of various products to meet the client's need.
Right.
So this is another thing that we can.
Yes, because I think when I came to you, my need was that I want to definitely leave a legacy for my children, which is what we created that product with. This is the product that we just spoke about how I can ensure my parents' well-being, which we haven't done anything about, but we will do it. So these are needs that came up, and then we kind of worked out what products are available. So I think similarly, is like would the requirements be similar for NRI products, like leaving legacy on everything? And I think mortgage and debt protection would be one.
Yes.
Yeah. So I think Natri, thank you so much for covering on all these important topics with us, your business. It's been great having you. And yeah, I think you'll hear from some of our clients over time. So
Sure.
I'm sure they'll be in your safe, trusted hands.
Absolutely.
Thank you so much, Tejas. Thank you so much for listening.